Hi everyone, today we're going to talk about Alibaba. You guys in the comment section have been asking for this one a lot, so hopefully this video helps you guys that have been asking for it. And it is going to be about Alibaba, but you could basically use this to every Chinese stock out there because it has been a bloodbath this year. So yeah, I'll give my thoughts on Alibaba because it has been dropping even more since I last talked about it really. So yeah, we are currently down 50% on Alibaba from all-time highs, and with that dip, a lot of people are looking going, okay, this is down now 50% from all-time highs. Is this one of those where this is an overreaction, or does this company deserve to be 50% down? And a few people are looking at this and thinking, is this a great buying opportunity? Which is good to see, because one of the things you want to look at is if a stock or a company has one of those massive drops, is this a buying opportunity? So yeah, we'll go through that one today anyway. So starting with the chart, obviously we've said that the stock is down 50% and is at one of the lowest valuations it has been for a very long time. Valuation is looking very cheap on this one. If you go from a PE history, very cheap on the PE history. I think it's the cheapest it's ever been. And if you go on a price to sales ratio, once again, it's one of the cheapest it's ever been. And yes, I'm still loading off Y charts for free. But yeah, from a valuation point of view, it's very, very cheap historically. From the chart point of view, massive share price drop. Now we look at the company. What has the company done? First of all, it's got a good building foundation because it has an amazing balance sheet, very healthy. And then when we look at the growth, you look at the growth and you see 30% revenue growth. So 30% revenue growth is fantastic. We look at a company like that and you think, okay, if it carries on growing at 30% a year, what you should see is the share price moving up, and it's probably going to outperform a lot of stocks, because what you have is you have a company outperforming the market. Not every company in the stock market grows at 30%. So you should see a share price moving in the right direction. And earnings move in the right direction. It doesn't move as quick as the revenue, because what this company does is it reinvests into growing the company and buying other companies out, and that's why it has the good revenue performance. But without the investments, you would see a company always moving in the right direction, earnings and revenue, because what you'll have is that revenue growing, that will go to the bottom line and that will move up in the right direction. But everyone looks at Alibaba and a lot of companies like this and go, okay, we know you could make more profit, but we like that you're continuing to grow the business. So from a company's point of view, you look at this one and go, the revenue grows and the earnings are growing. Now what we do as investors and what we try and do is we buy companies, and when we buy them companies, we do that to make money. We make money by that share price moving up in value. So how does that company move up in share value? The reason why a company moves up in share value over a long period of time is because it grows revenue, and that revenue goes to the bottom line and that grows earnings. If you buy a company and the earnings and the revenue move up in the right direction, over a long period of time, you will see that share price also moving in the right direction. And that's historically how the stock market has gone up in value for the last how many years. So that's what we're looking for. And with this company, you're looking, thinking there's no financial problems with this. It's done amazing previous financials, and going forward, it looks like it's going to do solid financials. So you're thinking, okay, first of all, it passes the valuation check. Growth-wise, it passes the growth check because we have good financial performance. Last little thing that I'm going to add in here, which is a little bit of a change from when I last kind of talked about Alibaba, is Charlie Munger. Charlie Munger is one of the biggest names to kind of come in and start buying Alibaba shares on this dip. Now what has been very interesting is that Charlie Munger has carried on buying the dip in Alibaba. Now when you look at Munger and all the greatest investors out there, which Charlie Munger is when they buy into companies, and let's say they buy a company that's worth should be $100 stock. If they see that at $50, they go, absolutely amazing, that's the company I want to buy. I don't want to buy a company at $100 that's at $100 and worth $100. I want to buy a company that's at $50 that's worth $100. And you know what? It might not get there in the first kind of couple of months, but over a long period of time, it will get there. Now, sometimes when you buy them beating down dogs, is that sometimes you'll buy a stock at $50, which should be $100, but that stock goes even lower. It could go to $25. And when you have that situation, it can be quite a test. But what you will see with a lot of the greatest investors is if they do really like the company, they will just keep buying it, because when they keep buying it, they get their average lower, and that will give them more upside in the long term. And clearly that's what Charlie Munger's thinking about Alibaba. He keeps buying because he thinks he will make more money. And that's one of the big tests. As you an investor, if you buy a company and then you start going down on that company, and at some point you're hesitant to buy that stock, I mean, there might be some other reasons why, but if we just kind of take this from a broad point of view, if you buy a company and that company starts going down in value, and you go, oh, you know what, I don't know if I want to buy it, there's probably something going on there. It's either that you haven't researched that company enough, so you don't believe in it, or that you did not buy the right company for you. You either realize that you don't like that company, or you haven't done as much research into it what you should, so that when that situation happens, you go, oh, it was at $50, it's at $25 now, I'm going to make more money on it. Because if you have a company that buys down, that you buy and it keeps going down, you should love that, because your upside should stay the same and you make more money. And it's very interesting to see one of the greatest investors that's here, Charlie Munger, is still doing that right now with Alibaba. So that's a little vote of confidence right there for Alibaba. Now, let's talk about what's going on with the share price, because the share price just keeps going down and down and down, and 180, 160, 140. And who would have thought that? Who would have thought it would just keep going down? But that is the stock market. It is the reality check that in the stock market, these things happen. You kind of think, oh, the stock market's going up and up, it's only going to go up, it's never going to go down, and then we have the dip and it falls off a cliff. It's probably what's kind of going on a little bit right now, especially in the small market caps. You look at the stock market or the small market caps and you go, oh, it just keeps going down for so long, it's never going to go up. And then one day it happens, it goes up. If things happen so quickly, and it can change, and the turnaround in the stock market is unbelievably quick. The stocks of like Google, Amazon, Facebook, you probably look at them sort of companies and go, oh, them companies are never going to have a 30% dip. Realistically, that could happen next week. It could be next month. Them companies that you think could never have a dip, they can have them, and it will happen at some point. So yeah, when it comes to that kind of reality check, things can change in the stock market very quickly, and Alibaba was a prime example of that on the share price front. But getting back to Alibaba, why is this happening? Because when we look, you think, okay, this is massively oversold right now. You look at the valuation screaming that said buy at historic lows. You look at the growth, there's no problem with the financial results. So why does the share price keep falling off a cliff of Alibaba? It goes down to one thing: China. This is the cause of why we are in this situation with Alibaba. It's China. And you could take this how you want to do it, and I will not be biased at this point on this one, but basically, I mean, I could have shown a lot of articles, but what is happening at the moment is the Chinese government are getting quite outspoken, and they are saying a lot of things that refer to Alibaba. And basically China have got to the point now where they are putting a bit more pressure on a lot of Chinese companies at the moment. And the thing is, you have that pressure on these Chinese companies, and you'll see this with all the Chinese companies. But as well as that, what you have on the other end is you have the US. The US have the media outlet, and they love reporting on that, because obviously the US and China don't have a great relationship, and there's a lot of bears and bulls out there, and especially on the US media side of it as well, they're obviously very negative on it. And if they have the chance, obviously they want a lot of their investors to be invested into US companies or Chinese companies as well, and there's that also playing on in the background. But that's all being created because China are putting a lot of things out there that could affect Alibaba. It depends how much you say they will affect them. But the big worry that a lot of people have is that the Chinese government is very different from the US government. When the Chinese government go, you know that thing you're doing, you can't do that anymore. And Alibaba and Tencent go, okay, we'll stop. Whereas the US government will go to someone like a Facebook and go, Facebook, why are you doing that? Will you stop it? And they're like, yeah, we promise we'll stop it. Carry on doing it, it's all right, don't let them know. And that's the difference. There's the US where the US is a bit more, can you please stop doing that? And the US companies are like, maybe we'll see about it. But the difference is when a lot of the Chinese government come out and say a lot of these things, it's like, you stop that, and it's like, yeah, okay. There's that little difference, and that's what's happening at the moment with China. They're putting a lot of these policies in just to make sure that they are still in control of the whole situation. They're looking at the companies of Alibaba and Tencent and going, why is that happening? We don't know if we like that. Will you stop doing that? And that is affecting the share price. And at the moment, there is a lot of that going on with China, and that's why you're seeing a lot of these Chinese stocks going down in value. Now, the big thing with a lot of these is you've got to kind of assess and think how much will that affect these Chinese companies. If you think it's just China going, making sure they've still got power still, and thinking, well, why would they kind of want to affect Alibaba that much? Because Alibaba is one of the biggest companies. That's obviously great for China. They obviously employ a lot of people. They also stop the likes of a US company like Amazon coming in. So is it in China's best interest to kind of destroy Alibaba? That's what you got to think. In my opinion, I don't think so. I think they still want to prove they're in power, but they don't want to. They want to prove they're in power, but they also don't want to completely disrupt Alibaba. So I think there's a little bit of kind of just making sure they're in power going on here. But at the same time, do I think this will affect Alibaba in the long term? No. But you could make that case for that if they carry on doing these sort of things, it will affect Alibaba. And that's the big thing. You've got to look at a lot of these things and think, is this going to affect their financials? If you look at Alibaba and think that's going to stop their revenue growth and their profit growth, then you don't want to be buying this. If you think, okay, yeah, they're getting a bit of a slap on the wrist, stop doing this and this, but realistically, Alibaba's still going to grow profit, it's still going to grow revenue about 30% rate, then you're probably looking at this and going, okay, when China stop putting out there that they're in control and they calm down a little bit, then the investors will come back in, then you start buying. And that's what it comes down to with this. And this is why I always kind of don't invest in too many Chinese companies and kind of don't go over 10% of my portfolio, is that you are kind of relying on not the company but the actual government to kind of help you with your share price, really, because as soon as they stop pushing that out, a lot of these Chinese stocks will go up in value. If they carry on pushing it out, then these Chinese stocks will go down in value. And it's one of those where you've got to kind of look at it and think, well, do you think the company's fine? And if you think it's China more showing they're still in power, then this is a buy. If you think it's one of those where you think that China will carry on doing this and then it will affect the financials, then you don't buy, basically. And that's the situation that you do have with Alibaba at the moment and a lot of the Chinese stocks that are out there right now. So in my opinion, like I said, I think this will cool down a little bit, and I still think the financials will be good for Alibaba. So for me personally, I'm a buyer. And also, I guess what helps me is that I've been through something very similar in 2018. I went through the Chinese stock crash in 2018 and I bought Alibaba and a company called JD.com. I made nearly 100% on my Alibaba shares, and then JD.com, I made over 300% on JD.com. So for me personally, I've been through this situation before, and there was a lot of negativity about China out there back then, and then it all calmed down within a year's time, and then I made good money. So for me personally, I've been through something very similar, and I think it will basically turn out the same. You might have been through that, or you might not have been through that, and you might think this situation won't play out very similar to what that did last time. But for me personally, I think this will calm down. These are still okay, and I've been through this situation before, and last time I did, I think I made some good money on it. So yeah, I am still a believer in Alibaba, and very much like Charlie Munger at the moment, I'm just kind of every so often just nibbling away and keep adding into the position. And yeah, like I said, this is a bit more of a video of, normally I go, this is why I'm bullish on it, but at the same time, this is one of those that I understand if you don't invest in this one, that it is them little risks there. If they are the risk there, and if you don't want to invest in this one, I understand it's a bit more of a, a bit of a neutral video, I would say, really, more than anything. But yeah, I'd be interested to know your opinions in the comment section, so let me know and hit the like button, and I'll see you on the next video.